Molly. And also joining us now is Eddie Gabor, co-owner of Key Advisors Group. Eddie, great to have you here with us today. Let's start with Disney. Disney shares are up 1.8% in after-hours trading. What are your first impressions on this report?
You know, Disney definitely benefited from low expectations. They did not have to have a huge revenue beat to get to where that we wanted to see from a market standpoint. So coming into earnings, Disney had really low expectations. They beat on revenue. And, you know, the Parks and Rec side kind of shows that the consumer is strong. So I think this earnings just continues to support the earnings season that we are having, that this bull market is here to stay. And
Yeah.
until tell us otherwise, no one can convince me of that otherwise.
Okay, let's dig into some of the line items here. Specifically, we want more color, we want more details on streaming because we know that is the future for many of these media companies to diversify their revenue. What have we learned so far, Eddie, on this?
So I think that's going to be the key for the long-term growth for Disney. Is the one thing they do have, which is something that most companies don't have, is they've got the client base. They need to find a way to leverage that client base to penetrate the market and beat Netflix in that space, or at least compete with them. I don't know if they're going to beat them, but there's plenty of market share for them to go after. And for Disney stock to succeed long-term, I think they're going to have to prove to be successful there. So I don't think we know enough about the streaming side yet, whether or not to say that they're heading in the right direction or not. But that's the hope and the goal for investors.
Eddie, let's bring you back in on this streaming conversation some more. Netflix has proved that it has pricing power, raising its prices, Hulu adjusting its prices as well. What do you expect in terms of how Disney is going to treat its pricing for Disney Plus, for Hulu, and how it's going to be able to prove its pricing power against Netflix?
You know, I think that's the challenging thing for them. To the other person's point, I think he's hit it dead on, is they have to properly articulate and put a plan together on how they're going to attack that. I think they're going to have to be very aggressive in their pricing in order to be able to penetrate the client base that Netflix has, because right now, again, they haven't proven that. So it is going to be a costly venture, and if they're not careful, they could burn through too much cash and it would crash and burn and fail for them. I think it's going to be challenging, but I think it's something that they can absolutely do with a clear, direct vision.
Eddie, how do you think Snap is going to compete when it comes to this stories feature? Because Facebook seems like it's just eating its lunch.
Yeah, they are. And I don't know if they can compete in that space. But in regards to the earnings report that they came out, one of the things that was most impressive to me was the fact that they didn't really lose users, because I think that was a concern from an investment standpoint. So I think the hope is, as an investor, is maybe they've stopped the bleeding and now that they can start growing their business, and hopefully they've hit bottom and it's nothing but upside for them moving forward.
Okay, Eddie, thank you so much for joining us here on the show. Eddie Gabor, the co-owner of Key Advisors Group. Thanks again.